So basically, everyone knows that in England, across the whole country, house prices have increased substantially over the last year. Probably, I think the average was 10%. And most of our clients have seen a minimum of 10%, probably more like 15% over the last year. That is obviously on top of their rental cash flow. And the question is, well, has that been caused by the stamp duty holiday? The answer is very simple. Yes, it has. A lot of people who are looking to purchase properties in the future brought forward their purchasing decision because they wanted to benefit from that extra saving. What did happen in that period a little bit was that the prices were increasing very quickly, and depending on whether you expect those prices to go down or not afterwards, would mean that you either made a good decision by buying the property, or you made and saving on the stamp duty, or you made a bad decision because the saving on stamp duty might have been negligible compared to the additional amount that you paid for the property. So where we are right now, the prices, there's certainly more supply coming to the market. There's more properties that are on the market. There's also slightly less demand than there was a month ago, and a lot less demand than there was 2-3 months ago. And that's because people can no longer benefit massively from the stamp duty holiday, and the people who know about this will already know that you can. The answer is you can. If you're a first-time buyer, you can still benefit up to the end of September. But for buy-to-let investors, you still have to pay the additional 3% stamp duty anyway, so there's no real benefit. It was more kind of a perceived benefit than an actual benefit for people that were purchasing in the last quarter and the last quarter before that. And what's ultimately happened with house prices as a result of this slightly dampening of demand and increasing in supply at the moment, marginal dampening of demand and marginal increase in supply, is that the house prices have started to not increase as fast. So they're not decreasing, that's a big point to make, and they are still increasing, but just not at the same rate that they were previously. With regards to whether in the future those house prices are going to decrease or not, I think it really depends. Obviously, no one has got a crystal ball, no one can read the future, but it does depend on what your disposition is. I've done lots of research into what I think is going to happen. There's an 18-year property cycle that is, usually works. If you put yourself onto that map, it says that at least for the next 5, 6, 7, 8 years, the property market is going to continue to increase. We always have a small recession followed by a big recession, and then we have effectively thereafter a small boom followed by a big boom. So what we had was the small boom, which happened, then we had the recession, let's call it, which was the pandemic time, and then now we're going to have the big boom, which is going to happen over the next 5 or 7 years. So I think that house prices in general over the long term, in the next sort of 10 years or so, are going to continue to increase. I think that right now, immediately, what's going to happen to house prices is that there's again going to be that dampening. There might be a levelling off of house prices over the next year, maybe 18 months. But at the level that we're purchasing properties for, which is between typically £100,000 and £150,000, I don't think that there's going to be a decrease in those prices. And the reason I don't think there's a decrease in those prices is because there's just too much money in the economy right now. The government has printed loads of money and given it out as grants, as loans, and lots of people have lots of money and they don't know what to do with it. And when they don't know what to do with it, they'll put it into, some people will risk it obviously, but some people, if they're loans especially, knowing that you have to pay back loans, will put it into safer investments. So tangible property or gold or investments like that. So as a result, I think that the house prices aren't going to dip in that kind of up to 200 grand level. I think after 200 grand, that's when you start to think, okay, maybe the house prices might dip. And then of course, if you're looking at the kind of over £1 million level, depending on how those people live, I think the house prices may well take a little dip. But I just don't think that this is going to be, a 10 or a 20% dip. I think this might, my opinion is at the very worst case scenario, we're looking at a few percent, 2-3%. And then the question then comes, well then do I wait? Do I wait to buy, or do I buy right now? And my opinion has always been, having done this for some time now, my opinion has always been buy immediately, buy as soon as you can, because the prices continue to increase, and the deals that are available today, the properties that are available today at the prices that are available today, one day you'll kick yourself and wish that you had bought twice as many as you bought. I am here, I'm living proof of this. I wish that I'd bought more than I bought, and you know, I've got a fair few properties, but I still wish that I bought double the portfolio that I previously purchased, because the house prices have increased, and they were going to, I believe, continue to increase. And then the flip side of the question that we need to consider is, well, what's the worst case scenario? And let's just caveat again, this is not advice, this is just my opinion. I think realistically, if house prices do dip a little bit, well, as long as you don't sell them, then you're still making your income from them, and eventually they'll go up in price again. So the worst case scenario is you still have property, it's still going to, over the long term, increase in price, and you might have to just in the short term deal with the fact that you have a property that is, you know, worth slightly less than you purchased it for. You purchased it for 130 and it's now worth 127. It's not a big deal. So yeah, there's my take on what's happening right now and what I think is going to happen over the next few months and the next few years. And the main message is, I think, as it has always been, I don't think there's ever been a better time to purchase property, whether that's with us, whether that's in the north. Having assets, tangible assets, is never a bad thing.